Welcome to the deep dive. Today we're plunging into the latest numbers from GAIL India Limited.
That's right, a major player in India's energy scene.
We're looking specifically at their first quarter results for fiscal year 2026, just released.
Dan, we've got the official press release from July 28th, the detailed financials, both standalone and consolidated, and their investor presentation, all fresh.
So our goal here is to really unpack all this data.
Exactly. Pull out the key insights, the important stuff.
Give you a clear, digestible picture of how GAIL's doing, their strategy, and, the bigger picture.
Okay, let's dive in.
Right. Let's start with the big picture, the overall financials. GAIL's standalone figures first. Revenue from operations came in around 34,800 crore.
Right, nearly there.
Now, compared to last year, Q1 FY25, that's actually up a bit. They were around 33,700 crore then.
So a modest increase year on year. That sounds okay.
Yeah, but interestingly, it's down slightly from the last quarter, Q4 FY25.
Okay. A slight dip quarter on quarter then?
Yeah.
What about the profit?
That's where the story changes a bit. The standalone profit after tax, or PT,
Yes.
stood at about 1,886 crore for this quarter, Q1 FY26.
Okay, 1,886 crore. How does that compare?
Well, it's quite a noticeable drop from the same quarter last year. Q1 FY25 saw PT at over 2,700 crore.
Wow, okay, that's a significant decrease year on year.
And it's also down from the previous quarter, Q4 FY25, which was closer to 2,050 crore.
So profit down both year on year and quarter on quarter.
Correct. On the standalone side, revenue's kind of steady, maybe slightly up year on year, but profits definitely took a hit.
Interesting. Does that hold true when we look at the consolidated results, the whole GAIL group?
Good question. What do the consolidated numbers show?
Well, broadening out to that full group picture subsidiaries, JVs, the whole family,
Right.
we see a pretty similar trend, actually. Consolidated revenue from operations was about 35,430 crore in Q1 FY26.
Okay.
That's also a dip quarter on quarter, down from around 36,550 crore in Q4 FY25.
And the consolidated profit?
Consolidated PD, excluding the non-controlling interest part, came in at 2,369 crore.
Which is also down from Q4?
Yes, down from about 2,492 crore in Q4 FY25.
So the pattern holds.
It does. What's really fascinating here, like you said, is that divergence. Revenue holding relatively steady, maybe even up a bit year-on-year standalone.
But profits are squeezed.
Exactly. Squeezed both year-on-year and quarter-on-quarter. It's not just a minor thing. It points towards pressure on their margins.
Especially in core areas.
Potentially, yeah. Maybe higher import costs for gas, or maybe pricing pressure in the market. It really suggests a tougher operating environment.
Even for a giant like GAIL.
Even for GAIL, it definitely makes you want to look closer at the individual business segment.
Absolutely. That profit-revenue split is key. So to figure out why, we need to break down GAIL's operations. Where did the money come from, and where did the profits or losses happen? That's where it gets really interesting.
Precisely. So let's look at the standalone segments for Q1 FY26, revenue-wise. Natural gas marketing was the big one, as usual. About 31,000 crore.
No surprise there?
Nope. Then you have natural gas transmission services, bringing in around 2,800 crore.
Okay.
Petrochemicals contributed about 1,680 crore. And LPG and liquid hydrocarbons added roughly 1,080 crore.
And city gas?
City gas distribution, the CGD business, and some other smaller bits combined for about 530 crore in revenue.
Right, so that's a revenue breakdown. But the profit picture, the segment results before interest and tax, that's what really matters for the bottom line, right?
Exactly. And here's where we see some crucial shifts. Natural gas transmission actually performed well.
Oh, good.
Yeah, results were 1,557.56 crore, which is up from Q4. Seems like a steady performer, that segment.
Okay, transmission is solid. What about marketing, the biggest revenue chunk?
Marketing. Profit there was significantly lower, only 1,071.60 crore.
And that's down compared to?
Down noticeably compared to both Q4 FY25, which was over 1,200 crore, and way down from Q1 FY25, which was over 2,000 crore.
Wow, so that's a major factor in the overall profit dip.
A huge factor. But there's another drag.
Let me guess. Petrochemicals.
You got it. The petrochemicals segment reported a loss. Again.
How bad this time?
A loss of negative 248.63 crore. And the worrying thing is, it's worse than Q4's loss and much worse than the small loss they had in Q1 last year.
So that problem isn't going away, it's actually deepening.
It seems so. It really raises questions, Are their input costs too high? Is there a glut in the global petchem market? Or maybe issues within their own operations? It's definitely something to watch.
Okay, so financially, we see marketing under pressure and petrochemicals losing money, pulling down the overall profit despite transmission doing well.
It's a good summary.
But financials are only half the story. What about the actual physical operations? How much gas are they actually moving?
Right, the physical side gives important context. The investor presentation has those numbers. They use MMSCMD.
Million metric standard cubic meters per day.
Yeah.
Huge volumes.
Colossal volumes. So natural gas transmission volume was 121 MMSCMD this quarter.
How does that compare?
It's actually slightly lower than their average for the whole of last fiscal year,
Yeah.
FY25, which was 127 MMSCMD.
Okay. And marketing volumes?
Marketing volumes were up, actually, 105 MMSCMD compared to an average of 101 MMSCMD in FY25.
Interesting. So marketing more gas but making less profit on it reinforces that margin squeeze idea.
Exactly. And just for context, physical sales for petrochemicals were 177 TMT, 1,000 metric tons,
Right.
and liquid hydrocarbons were 198 TMT. Helps frame those financial results.
Okay, that paints a clearer picture of the scale. Now, where does all this gas come from? The supply side.
Good question. For the gas, they transmit that 121 MMSCMD.
Yeah.
A big chunk, 71%, came from domestic sources, what they call APM or NAPM gas, often price regulated.
Okay, mostly domestic for transmission.
Then about 27% was imported RLNG, regasified liquefied natural gas, and spot purchases, more market priced. And a tiny 2% from partners like RAL and BP.
And for the gas they market, is the mix different?
It is, yeah. For the 105 MMSCMD they marketed, almost half, 48%, was that imported RLNG spot gas.
So a much higher reliance on imports for sales.
Definitely. Then 35% was domestic APM and APM, 14% was specifically marked as overseas sales, and 3% from those RIL and BP fields.
And that mix matters because the cost of imported gas can be more volatile, right? Affecting marketing profits.
Precisely. It directly impacts that marketing segment profitability we thought was under pressure.
Makes sense. Okay, so they source it, they transmit it. Where does it all go? Who are the main customers?
The main consumers in Q1 really highlight GAIL's role in the Indian economy. Fertilizers were the biggest users, taking 38% of the demand.
Wow, crucial for agriculture.
Absolutely. And the second biggest was city gas distribution, CGD. That's the gas for homes, businesses. That took 27%.
So fertilizers and city gas are the two main pillars of their demand side.
Correct. That shows you their key markets.
All right, let's shift gears a bit, away from the Q1 performance numbers and more towards the future. What about strategic moves, investments?
Yeah, the chairman and MD, Sri Sandy Kumar Gupta, highlighted some key things. CapEx, for instance.
How much did they spend?
In Q1 FY26, they incurred about 3,176 crore in capital expenditure.
Where did that money go?
Mostly into pipelines, petrochemicals. Despite the losses, they're still investing there in equity for their joint ventures.
Any major projects announced?
Yes, a big one. They got authorization to expand the capacity of the Jamnagar-Loni LPG pipeline.
Expand by how much?
They're essentially doubling it, going from 3.25 MMTPA, that's million metric tons per annum, up to 6.5 MMTPA.
That sounds significant. What's the cost and timeline?
Estimated CapEx is around 5,000 crores, and they expect to complete it within 3 years.
And they highlighted benefits beyond just capacity.
They did. They specifically mentioned it will, and I quote, cut down on co-Euros emissions significantly and reduce road mishaps and leaks. So hitting efficiency and environmental points.
Interesting. Ties into the ESG focus too, right?
Absolutely. And speaking of ESG, environmental social governance, GAIL was included in the FTSE4 Good Index series again.
For how long now?
This is the 7th year running. So it underlines a consistent focus on sustainability and governance.
Okay, so big investments, focus on ESG. But let's look at the fine print. The financial filings often have an emphasis of matter section where auditors flag things. What showed up there?
Right, that's always important to check. Auditors basically use this to say, hey, pay attention to this specific issue, even if the accounts themselves are okay. There were 3 main points.
What's the first one?
Transportation tariff orders. Essentially, GAIL is in dispute with the regulator, the PNGRB, over tariffs set for its pipelines. They've challenged orders at the Appellate Tribunal, APTIL.
And customers are involved too.
Yeah, some customers have also challenged these orders in court. So it's ongoing.
Yeah.
Any financial impact will only be recorded once it's all finally settled.
Shows the regulatory hurdles they operate under.
Definitely. It highlights how much regulatory decisions can impact their bottom line. It's a big external factor.
Okay, what's the second point?
The NAFTA excise duty dispute. This is a big one, potentially.
How big?
A demand from Central Excise for 2,889 crore related to how NAFTA was classified. And with interest, as of June 30th, 2025, it's up to nearly 3,700 crore.
Oof, that's substantial. What's GAIL doing?
They've appealed to the Supreme Court. The court granted a stay, but they had to deposit 20 crore and provide security for another 132 crore.
And GAIL thinks they'll win.
They're confident, based on legal advice. So they've listed it as a contingent liability.
Meaning it's a potential future cost, but they don't expect to have to pay it.
Exactly. It's a risk noted in the accounts, but they believe the outcome will be favorable. Still, it's a large number hanging out there until resolved.
Right, and the third point.
Outstanding dues from a company called Nagarjuna Fertilizers and Chemicals Limited, or NFCL.
How much is owed?
About 840 crore.
Also not insignificant. Is GAIL likely to get that back?
Management seems very confident. They're citing expected government subsidy releases to NFCL, potential policy changes benefiting NFCL's claims, and selling off some of NFCL's non-core assets.
So they haven't made any provision for potential non-recovery?
No, which shows their confidence level.
Yeah.
But again, it's a sizable amount outstanding that investors should be aware of.
Okay, those are important caveats. Beyond those specific issues, any quick indicators of GAIL's overall financial health from the Q1 numbers?
Yeah, looking at a few standard ratios, standalone basis.
Yeah.
Their debt-equity ratio is quite healthy at 0.24.
And that's down slightly?
Yes, down from 0.26 at the end of FY25. Suggests good financial discipline, maybe lower reliance on debt, which is good for a capital-heavy business.
Makes sense. Other indicators?
Net worth is solid, over 65,000 crore. Basic earnings per share for the quarter was 2.87.
And margins?
Operating margin was 7.06%, and net profit margin was 5.43%. As we discussed, those margins are tighter than they have been.
Right.
But the overall financial structure still looks fundamentally sound based on these ratios.
And worth mentioning, they reported no issues with how they used funds from private placements and no defaults on loans or debts.
Correct. Those are positive signals regarding financial transparency and stability.
Okay, so let's wrap this up. Our deep dive into GAIL's Q1 FY26. It's really a mixed picture, isn't it?
It really is. You've got revenue holding up reasonably well, especially year-on-year on the standalone side.
But profits took a definite hit, pulled down mainly by gas marketing margin pressure and those ongoing losses in petrochemicals.
Exactly. But then you balance that against significant strategic moves, like that big LPG pipeline expansion.
Promising efficiency and environmental upsides.
Right. And their continued strong ESG performance, being in the FTSE 4 Good Index again.
So challenges in core operations, but strategic investments and ESG focus looking forward.
Which leads to maybe a final thought for you, the listener, to consider.
Okay.
Given these big investments, like the LPG pipeline and the consistent ESG recognition, how might these position GAIL for the future energy landscape? You know, a future that values efficiency and environmental responsibility more and more.
Especially when you factor in those persistent challenges in segments like petrochemicals and the ongoing regulatory stuff we talked about.
Exactly. How does GAIL navigate that complex equation going forward? Something to mull over.